What's up, guys? Good morning. We get started in a minute. It is 8 a.m. New York time. So good morning, good evening, good afternoon. It's 9 p.m. in Asia and 11 p.m. or 1 p.m. in London. So good afternoon, good evening to both of those regions. All right. Just get some stuff set up. Turn down the background noise. What's up, buddy? Yes, let's make some money indeed. Okay, let me just change the screen. All right, good morning, guys. This is another pre-market stream. I said I was going to start doing these Monday through Friday, so today is Tuesday. We had a stream yesterday, so we'll go over some of the levels that I talked about during yesterday's pre-market stream, and hopefully we'll wrap it up just as quickly as yesterday as well. I don't want these streams to run for more than an hour. Market opens at 9:30 a.m. And I want to be able to take a little bit of a break before that. But the purpose of these streams is to give a little bit of a game plan for the day, unpack what happened overnight, and see if we could identify any tradable opportunities. And what I realized after yesterday's stream is, because I started and I was like unpacking some current events from the weekend, Monday streams will probably be more like that, where again, the purpose of the stream will be to identify what we're focusing on for the day, whether that's narratives that are developing, anything that's taken place event-wise, whether or not we have anything that will take place, throughout the course of the day, whether or not it's some kind of macro-related event, looking at the economic calendar. Obviously we'll sort of map out the day, but Mondays, we're going to be unpacking ultimately what happens between Friday evening and Monday morning. So it'll probably be a little bit more of one of those types of streams where, one, I don't trade a whole lot on Mondays either way. Tuesdays and Wednesdays are the best days as far as realized vol goes and as far as just any activity in the market. And that's been as of the last month and a half. So that'll be the way it is. Good morning again. If you're not subscribed, make sure you hit the subscribe button, hit the like button. Be sure to check out the links below. So Phemex, as I mentioned, is, I didn't say specifically what they're doing, but they're creating a new bonus structure. So starting this week, there'll be new bonuses. And all I can say is, I don't know the exact amount, but I know it's at least double what their current bonus structure is. So if you do sign up before then, just let me know, because you're not going to miss out on that. Again, because of everything that's happened, and this is something that should have been followed either way, just make sure that you're using leverage the right way, which is to mitigate counterparty risk. That is one of the benefits of crypto offering high leverage. It's not to gain increased exposure. It's to be able to mitigate counterparty risk. And clearly, we have an idea of, or the market for a long time had an idea of who it could trust and who it couldn't. And it turned out to be that the person that was the most trusted, by a majority of the market, turned out to be the one to turn around and stab everybody in the back. So none of this is financial advice, strictly for entertainment purposes only. We're going to get right into it. Before we start, just to give you an idea of what realized vol is throughout the week, because I do say that. I say that, I don't really like to trade Mondays. It doesn't mean I don't trade on Mondays. But it just happens to be that as of the last month and a half, this is going back, it's almost 2 months now. This wasn't the case the entire year. Obviously, if you look at the entire year and you group in, the summer and the fall, or the, second quarter, third quarter, fourth quarter, you're going to have different results because, those summer months are going to be different. Period. There is obviously seasonality to deal with, or seasonality that takes place rather. So what you're looking at right here, this is Amber data. So this Genesis volatility, they are now known as known as also known as Amber data. So I am, just real quick, I share this platform. I'm actually an investor in the platform, so I'm one of the first investors in the platform, and it's a phenomenal platform. It's probably not like the most beginner retail oriented platform. It is I think it's a little pricey. It's more for those that are really interested in sort of high level derivatives data. But what you're looking at right here is just, either way, they have some very valuable, very useful rather, resources and tools that you could take advantage of. Is realized volatility, day of the week, and intraday hour. So from Monday, right, through Friday, these are the opens. Right, this is basically the New York cash session open, or as close as you're going to get without that. You have, it is 14 and then 14 and a half. Okay. So here's Tuesday, right? Here's Wednesday. And you can see just based on the sort of gradient these are the days where it really picks up. All right. You don't have to even use this tool, let me just say something first, because I have a tendency when I start these streams and I'm just on coffee, I speak a little fast and I miss points. And again, I kind of speak extemporaneously and riff a little bit more than maybe the average streamer, but I did make some bullet points. You could actually put on, there's an indicator called day of the week, and you can just pick the days of the week. So I'll show you really quickly, Tuesday, Wednesday, just for something that's easy to see visually. Here's Tuesday to Wednesday, and you could see that for the last, again, the last 2 months, the largest moves have happened on, between Tuesday, we'll say between Tuesday and Thursday, because obviously this extends a little bit, in some cases a little less in other cases. But if you're a trader, this is the time when you want to be around. And I think one of the benefits of one, a tool like this, or just two, identifying this is a market right now that is not investor friendly, but it still is trader friendly. It's obviously it is, and I say obviously a lot, and I feel like the problem with that is I'm taking for granted maybe the knowledge of people listening. It's a tradable market, but it is becoming thinner, right? It's the end of the year. People are less incentivized to trade as much. Obviously, that'll change in January. Thinner conditions, not as liquid. So it's from that standpoint, it's not the most attractive time to trade. But at least the benefit of looking at something like this is, hey, I know when the best times to be in the market are, period. So if I'm, for me, for example, all right, we're going into holiday season. We are in the holiday season. It's a time when I'm very busy, family's very busy, you got a lot going on, you got parties, you got gatherings, you have stuff you're planning, you got, all the things you need to do. And then I have a child that's coming on the 28th. Hey, like, when should I be in the market? At least I could start to whittle down some maybe windows of time where that's when I'll pay attention. All right, so I'll take Sundays off. I've really taken most Sundays off, weekends off for the most part. And then, hey, maybe Monday, I know that I don't, maybe trade well on Mondays. Two, there's really no reason to trade that much on Mondays. And I'm going to come back around on Tuesday through Thursday. So that's that. Really quickly, just before we start the stream and get into anything with respect to prices, this is something we're going to be focusing on because these are going to be daily streams. Every morning, we're going to look at the economic calendar. There's really nothing that's going on today. Tomorrow we have, what do we have? Consumer confidence, existing home sales, crude oil inventories. That's not as significant for us. And then Thursday we have final GDP, and then we have unemployment claims. All right, so this is probably going to be something worth paying attention to. These things, they have implications for intraday traders. Anything that's going to be moving the S&P. I know we went through a period where the S&P and crypto, or BTC, right? The coefficient correlation coefficient had sort of weakened a little bit. So the rule has been that, crypto has traded like risk, right? Further out the risk curve, but it's been very correlated to, your equity benchmark. So it's been very correlated to the S&P. It's been very correlated to the NASDAQ. At one point it traded more like the NASDAQ. The NASDAQ is kind of like the S&P trading after smoking a crack pipe. But realized vol in legacy markets picked up. Crypto became a little bit more boring. That correlation began to drop as some of the legacy participants that were sort of trading both markets, some of them got carried out of this market. Some of them pulled themselves out of this market. So the things that enforced that correlation and made it strong began to disappear. But if you look at the last few days, moves in the S&P, moves in legacy, they translated to moves in crypto as well. So I think it's just best to operate with the assumption until this changes for months that any kind of change is short term, and it's best to operate thinking that it's the rule, not necessarily the exception. Okay, until there is a prolonged period of time where it is no longer there, and then at that point it's like, well, you're not necessarily acting on it until it's late either way. All right, so nothing really that stands out today, but today, or rather the overnight, there was something very significant that took place in markets, and I think that this is significant because it makes crypto look less attractive. So we'll just get that out of the way really quickly. Obviously, we're going to have our diehards that are still, we're kind of at the point where I think the market is down to its true believers, I guess we'll say, but there's no reason to think that there isn't still supply that's going to come into the market, that there isn't supply that was picked up recently that'll be dumped. We still have there's a lot of, we'll say, uncertainty with respect to DCG and Genesis and how that bankruptcy and how that process will translate into the market, and whether or not there'll be, Bitcoin that's offloaded, or again, just kind of this looming uncertainty. But one thing that did happen overnight, which is very significant, is, and this is Brent Donnelly, phenomenal guy. He is the author of one of my favorite books, Alpha Trader. USD JPY down 2 figures or so. So if you look at the USD JPY chart, again, I'm not Forex guy, so I'm not going to sit here and LARP and start talking about it like I have been. But these are things that obviously are going to have effect on our little market, because they have had an effect this entire year. And for anyone who's interested in trading legacy, obviously this should be front and center either way. But JPY right now basically strong against every other currency, every currency dropping against JPY, and it's because of something that they kind of did on a whim, right? So the Bank of Japan raised the upper band on the yield curve. So what they're allowing is basically, they were implementing yield curve control. So yields rise, interest rates rise. What they're going to do is be buying at that point to ensure that those drop. And now instead what they've done is basically raise that upper band. So think about it as if there was a Bollinger Band on the yield curve, right? Think about if there was a Bollinger Band on interest rates. And instead of that Bollinger Band being what was a little bit tighter to where they would ultimately get involved at that first, in the case of Bollinger Band, it would be 1 standard deviation. But in this case, it was a 0.25%. Now they've raised that threshold. Okay, so it's almost like if I was trading intraday and I'm saying, hey, I really want to start fading around 1 standard deviation. And now I'm saying, now I'm going to accommodate for a little bit more. So they're going to accommodate for a little bit more. And a raise from, 0.25 to 0.5 doesn't sound like a lot, but that's a 100% increase. All right. So they're targeting a different level for the 10-year. And the upper band is that threshold. Okay. Now, what does this mean? How does this impact us? Does it impact us? It doesn't look like it impacted us overnight, but long term, I think it does if it was to continue to persist, and I'll get into that. So basically, this will lead to higher rates in Japan, right? So one of the first order things from that is obviously borrowing costs, and that obviously has downstream effects that are, pretty drastic. So borrowing costs for people, borrowing costs for consumers, businesses. It makes the Japanese yen more attractive, which is something that hasn't been the case for a really long time. This makes Japanese assets more attractive, Japanese markets more attractive, whether it's commodities, equities. And for us, okay, you got to look at this almost as if they are allowing for higher rates, then, and this is Japan, why, and they're kind of the exception, right? Why they have been historically. If they're allowing for higher rates, then why is the Fed going to, do what many people perceive to be a pivot, which is not the pivot in the sense that's been used in the past, but a pivot in the sense that, coming down, maybe a lower terminal rate, maybe, stopping hikes earlier, all these things that have now been, or as of the last 6 months, have been perceived as what the pivot would be, rather than, pivot in the sense of them turning their printers back on, them cutting rates. So this makes it seem a lot less likely that they're going to be doing that in the near future. Now, obviously, things can change, right? Doesn't necessarily mean that people won't seek out other investments and try to front run maybe a possible change further down the line, and the market won't price this in. But what it does mean is that when risk-free rates and interest rates and yield is higher for these products, that risk becomes a lot less attractive. Risk in the traditional sense becomes less attractive, okay? And crypto risk definitely becomes less attractive. So being in this market is taking on a whole bunch of risk that we're kind of just very comfortable with, and you could see a lot of it more recently, and that is that massive counterparty risk. That's a systematic risk. Obviously, interest rate risk as of this year. Motion detected at front door. Sorry, that's my robot. So the risk-adjusted returns of crypto right now are definitely not where they were. This market is definitely not as attractive as it used to be from that standpoint. And as of last night, it became that much less attractive. Now, the risk-free rate is what it is. If you're going to buy treasuries, and as of the last 6 months, you could, it's like 4%. That is a risk-free return. Listen, you could have catastrophic failure of the whole system, but it's very unlikely that that's going to happen. That you could think about that return as being a return that's defended by guns, right? That is held, that is guaranteed by the government. So if that fails, then, we're in a much worse position either way, where it's not like we're going to be arguing over, why that failed. And we're going to be trying to find as many rounds of ammunition and cartons of milk as possible. But it definitely for the foreseeable future, if this continues, if this persists, it makes crypto that less attractive. All right. Especially if you're a large asset manager, why would you not just plug into that, it's a yield that we haven't seen in a very long time, put it that way. So this happens, right? Currencies depreciating against the yen makes the dollar a little bit less attractive, makes the yen more attractive. This is bad for risk. This is bad. This is, it's weird because we've had a strong dollar recently, or now we're at support. And then we've had weak equities, but this could lead to a weaker dollar and actually weaker equities as well. Also, this actually could increase, or rather can lead to inflation becoming even more of a problem. So we have a whole lot of shit on our plate, and it doesn't make crypto look any more attractive when it was already in a position where it was looking pretty ugly for the next few months either way. Okay, sorry, had to unpack all of that. We're going to take a look at the S&P. We'll take a look at BTC. It's 8:18, so we managed to cover all of that in record time for me. You guys know how I tend to speak in ellipses, lose my train of thought. And listen, I don't know what I have some bullet points for this, but I don't know. I kind of just like to speak off the cuff, even though that ends up maybe leading to streams that are not as enjoyable. So I apologize for that. Is there anything I want to touch on? This is the problem with memory. No, I think that is it. Just be mindful of what is taking place right now before we get into the actual charts, because the markets are already at their thinnest, right? So again, there's no real reason to be a big provider of liquidity or a big taker of liquidity at this point in the year. I mean, we're finishing up. This is when you would expect maybe certain window dressing to be put on, but we're not in a condition where anyone's going to be really doing anything major. And the market's being very thin. You have some potential widow makers on the table, some very fast moving trades that, again, if you're on the wrong side of them, why expose yourself to that risk at the end of the year, right? It's already been a shitty year. Right. Just go through the chat real quick. The settings of the day, the week indicator, it's just, all it is just highlighting. You click the day that you want to highlight, and then you choose the color. So there's really no need to. It goes based on the time frame that session setting you have for TradingView. All right, so first things first, S&P. So we'll look at TradingView. Or let's talk about really quickly how yesterday unfolded. So I talked about this yesterday during the stream. The break of this level of market structure. We had a much larger throwback than maybe I anticipated because I expected that we'd have a throwback similar to this back here. The idea being that there was a break in market structure here, market closed through the lows, but don't expect continuation off of that right away. Instead, expect that the market's going to penalize anyone who's just selling this break. So you often have a significant amount of mean reversion. And in this case, we had a much larger amount of mean reversion, spiked through, tapped above that key monthly level. I've been talking about that for a while now. But now we've, made a concerted effort back towards that low, of lost it again. This is much more convincing. The point being that I'm not bullish or looking really to prioritize any longs, or rather yesterday wasn't looking to prioritize any longs until we actually reclaim these lows and we put in a sign of strength above that. So that is, again, I said around 39.30, 39.50 region. As long as we're under that, I'd be looking to target some of these significant low points. So right around 37.50, right around 37, being these local pivots. All right. Obviously that can change, right? We could put in a sign of strength underneath this structure, right? Develop a little bit under here, reclaim this level, and then this looks a little bit more like some kind of deviation within a larger range. And, then we start targeting some of these upper bound levels again. This diagonal line has been quite significant. We have a weekly level up here. There wasn't a whole lot of two-way trade on the way down here, so it wouldn't be the case that you would expect a ton of friction. And if the market is able to reclaim a level like that, I think that would stand out as being pretty bullish. Yesterday, I thought maybe it would be a choppy day, but it was, it was a strong day down. Right now, things that stand out. So we'll go to, it's actually better to go to this. Just some local levels that stand out. The last 2 days, so this is incorporating after hours and regular trading hours in these sessions. The value area lows of both days, right around 38.58, and we also have a poor high right around that level as well. So you could kind of guess where the composite would be. So for yesterday and for Friday's session, so between 39 and around 38.50, we'll say, again, poor high today. So what that looks like is the market opened up here, retested the underside, or the market opened up outside of value, retested the underside of value, and just kind of one time frame and gapped down. This is obviously part of the BOJ news, but we haven't had any kind of significant attempt back into value of yesterday's structure. And again, that goes into Friday's structure as well. So that leaves us with something that's possibly a target, but I wouldn't just lean on that alone, that it exists, and think, okay, this means we're going to come back up here. I would say that there's a good amount of confluence in this region that if we're able to reaccept, that not only are we accepting above this high where, again, market hadn't traded, really hadn't walked into really that much selling, that this would be a good area to look for some kind of development and potentially move back to fill out yesterday's profile between 38.60 and up to that point of control, which is a naked point of control around 38.84. Yesterday, I just want to point this out. There was I'll save that because I'm going to make a separate video for that. So accepted outside of what is a 2-day balance right now. We have a decent low, and the last 2 sessions, if you just look at, and this doesn't guarantee anything. We closed out. This is the problem with this is these single prints are going to be from a prior contract month. So if you're looking at the TradingView chart, you wouldn't be able to see the same sort of gap that was that existed because that is a continuous contract. The gap for the most part closed out, and then we have a little bit less. What looks like a little bit less interest in selling these lows compared to the last 3 sessions. So if you look at just Delta, and you have a good low in the making down here right now, a good amount of distribution that we're now back above. If you look at Delta, there is, let me make sure this is scaled right, 135, 131, and then 2. And then if you look at the prior days, 1300, 369, and then, 448, 513, and then 8. So possibly some less selling interest at those lows, which would be good, because it's been kind of one-sided. We're still sitting, as I said, we're sitting sort of around, chopping around quarterly VWAP. You can see that on this chart right here. That's actually, no, this is today's VWAP, a quarterly VWAP. When we zoom out, that's kind of where we're sitting right now. Let's see, is there anything else I wanted to touch on with this? So that being said, as far as levels that I am looking to get involved, mindful of some kind of sweep around 38.56. So some kind of move back up to 38.56, tag the underside of that structure, put in a clean high up at that point. And then if we're unable to reclaim that composite, that level would probably be a good level to fade, expecting that maybe we come back down and test today's lows again, or test today's POC. So some move that fails right around 38.58 for a possible rotation back down to 38.40, and then we'll see if we continue to rotate through today's value. Today's VWAP is right around 38. What's that? 38.28. So holding VWAP after what is a pretty decent reversal on the day after a nasty overnight selling. But we haven't opened yet, so we'll see what happens whenever the cash session opens. As you can see, on my trading view, I kind of try to translate the same levels on the Sierra chart as I try to translate them to a trading view as well, because I know not all you guys have Sierra chart. So we have a naked POC. That's a volume POC, by the way. So I forgot about that, because on my Sierra charts, what you can see is this. The naked POC up here is a TPO POC. So that's where a good amount of where we spent the most amount of time. So you imagine from market structure standpoint, that would be some friction up there. But the volume POC is right around the break of Friday session's lows. All right. So towards the lows, you have people selling into that low. The volume POC is right around 38.59. You can see that's where, for much of the day yesterday, that was one of the highest negative deltas, or the most negative periods, or areas within price. So you have that POC right there. I'll go back to TradingView because it's labeled. You have the poor high right here, and then you have the 2-day composite, value composite from a market structure standpoint. So one sec, my drawing tool's a little. So lows, value area low, pivot. All right. So you have a poor high here, and then you also have that naked POC right in that region as well. So the point is, there's a whole bunch of confluence in that level. So a sign of strength above there. So price being able to hold this level, and then we're starting to aim back towards, again, you have that naked TPO POC, probably about right around mid-range of this structure, and then, possibly yesterday's highs. So that would be quite a reversal, right? Because you have the market that is the market. You have the market's coming down, cleans up a decent area of inactivity, ranging, breakdown, reversal after that overnight news, and then we're trading above today's distribution, today's volume, yesterday's POC, reaccepted back within a 2-session range. So I think that sets up a pretty clean bias, at least. So or it sets our bias up for the day if we're able to do that. Now the likelihood that we're able to do that, traveling from 38, 35, to, we have to put in 25 points just to do that and start paying attention. I think that it's possible that instead we have some kind of move up here, spikes into that level, and then we get left with something that is potentially, and my drawings suck. As the best drawings trader SC. We come up here, retest this, and we have some kind of failure instead, and then we could start targeting lower prices again, and just expect that. I mean, if I look at this structure, zoomed out on like the 4 hour, again, we cleaned up a good portion of this gap. You know, very one-sided move. We didn't, it looks like if you're looking at this, it's continuous, right? So that gap realistically would be all the way down here. If you're looking at last contract, you know, we rolled obviously, but if you're looking at the last contract on a TPO chart, it's a little bit higher. So we did flush out the singles from that prior contract. Not like that is that significant, but if I'm looking at this right now, I don't know if it's reasonable to expect that the market is going to just continue to trend down. So far, decent response this morning, right? So decent response overnight after that sell-off. But the make or break, I still think is higher. I guess what I'm saying is I kind of anticipate the market to chop, honestly. I don't know if we're looking at something that's just going to continue to fall off a cliff here. We got the bad news. The market is settling here right now. And yeah, that's that. And again, this is the, I mentioned yesterday's stream. This is right around the quarterly VWAP. So 3 month. So we're chopping around VWAP, which again, as I said, is an area that's ripe with liquidity, not the best area to form a bias, but if we're above it, right, if we reclaim that level, bulls are in control. If we start losing that significantly, it gives us more of, it makes it a little bit more clear that for this quarter, the risk that was put on, that suddenly you start falling below that sort of break-even price. But again, high time frame VWAP, so there's a good amount of turnover in order flow. Then you can imagine that the higher time frame you go, the more stale things become when you're looking at things that are derived from order flow and derived from volume. Still means that it's top heavy though once it does lose that level. So expecting chop, but we'll see, right? We'll see what happens when the market opens. Let's see, is there anything else I want to touch on? A little bit less selling interest, as I mentioned, towards the lows, first day of decent lows. And just to give you an idea of where that level came from, I keep saying, you know, we closed a gap. That line on my chart, that extends to the bottom of a single print. So that's where that comes from. I don't know if I'm going to be able to get the whole scroll. There you go. So right back to here. And then that's a naked POC that's slightly below us. All right. So a lot of red on the session, though. Again, so I think that means that if we end up reclaiming that POC and this entire structure below here, we've been able to overtake that after putting in that amount of effort. I think that you just start looking back up towards 39. All right, let's take a look at BTC. See if anything's happening. 10-year up a lot. Gold, big move. Oh, real quick. The S&P closed at 38.17. So be mindful of that, right? Because if we're looking at now, if someone created a weighting, I saw this not too long ago, to get the exact level that you'd be focusing on with the ES, because obviously the ES is a derivative. It's not going to trade perfectly with the S&P. But what you should be mindful of is, for example, just put this on. Here you go. Where this kind of closed based on the hour, so not that much of a gap. We'll see where the S&P opens. The S&P opens obviously below us. Just be mindful of that, because that I mean, it is below us now, but the gaps, again, when you accept into the gap, and especially with a market that has been heavy the last few sessions, accepting into that gap, sometimes it's a useful thing to or a useful, I guess, filter or qualifier to sort of set a bias, at least in the short term. You know, if for example the S&P opens up down here and we start to see that, you know, pre-market activity, we're losing our footing, then a lot of times I just try to target the extreme of that gap, and I don't hold it usually through the gap to the far extreme, the far side, because a lot of the times that gets front ran, or it just appears that it gets front ran, right? I don't know if that's actually a phenomenon that's taking place or it's just randomness, but it still seems like that. So BTC. So things that stand out with BTC. First of all, yesterday's stream talked about how we were accepting back within two composites and filling out a region where price hadn't been accepted prior. So really no value developed, and that was going back to this move right here. But before that, we had value between. So again, didn't change any of these lines on the chart since yesterday. We had this composite back here, so that's extending all the way forward. That is from the 23rd to the 27th, then we broke down, reaccepted within it. It's a decent, almost a week-long composite. And then we have, this is multi-week composite that is between, this was around where we're tapping right now, 16.85, 16.9 to 17.2. So there was a gap that was between those two structures. We retested it. I talked about how if you're expecting continuation, you want to get involved in the gaps. So we came down here, retested it, reaccepted, right? You guys remember me flipping bias at some point, talking about a short and then flipped long because we reaccepted it into the composite. Composite being a fancy word for where value developed when prices had been ranging. And value is different than the actual price levels. If we looked at, the daily closes of those levels, we'd have different numbers than we actually do if we're looking at the profile for that. So daily closes going to be slightly different than where the actual value lines would be drawn for value area high, value area low. So we filled that out, briefly reaccepted back within that prior composite, and broke down through the composite to that naked POC. So I talked about that naked POC and that daily level yesterday as being targets, or as possibly setting up as targets if we were going to get the breakdown. So we had that, and the market just reversed. So these kind of reversals are bullish, right? Talked about this all the time. This is a bullish reversal right now. Now, it's more bullish when you're sitting below a gap, when we're not just retapping we're just ping-ponging right now. We can't catch a break. So if this kind of breakdown, right? So let me just draw this on a flat plane or area where there's no, change this real quick. Flat plane, I mean blank fucking slate. Brain doesn't work. If the market had been trading much higher, came from a significant level, right? Broke down, traded back to this level, okay, and then broke down, right? Say that's, before that, again, maybe there's another really significant area of congestion here. You have an area of congestion here, area of congestion here. This is a gap, right? Gap, okay. So, this looks like a reversal. Trend is changing. Get the breakdown. Oh, fuck, we're going much lower. Nope. Instead, the market does something like this. So sometimes you get a bullish retest, or you get a reacceptance back within the range. It just hangs out here, and then you're thinking, well, maybe do I get mid-range at least? Do I get the high? All right, we'll be a little bit more conservative. And then sometimes you wake up or you come back to your desk and the market has ripped up, or you watch it happen maybe, and is now retesting the high of the structure. So that's the most bullish case, right? Trap activity down here. Trap those breakdown sellers expecting continuation, right, which is reasonable. And then there's enough short interest built up to squeeze back to the high, and then now you're holding this level as support. All right. And why might you be holding this level as support? Well, for a bunch of reasons. Right now, market structure is reclaimed. But another reason is if you trade back through this level fast enough, you're more than likely going to be messing around with shorts that have been opened right here. So for anyone who's short, if we reaccept back within the range, they could still think about it. But now if price is ripping back above an invalidation and their stop isn't hit, or it's a combination of their stops being hit as well because you get through a short squeeze, if the market comes back down to retest this level, imagine you being short, you're thinking, well, I'm going to get up out at break even. So what happens when the market retests it? If they weren't stopped out, they're getting out. So you end up just creating this support up here. That's great when you have this setup, right? Reversal of that nature, into a gap, then it's, hey, time is of the essence, man. If you're not closing this thing out, it could very well move like it did here without as much effort this time, though, because this might have been a short squeeze, but you're ripping back through structure. In this case, there's not much that stands in the way. There's no two-way trade that took place on the way down. There's unchallenged positioning here that would be glad to get out of position as long as price just came back, right? They're not thinking, I'm short from here, I'm going to place my stop up here, right? That's, they're probably thinking, I'm short here. If we come back to my entry, I'm getting the fuck out. So once you re-accept into a gap, price moves very quickly. Not the same case, right? We don't have like we don't have the greatest sense of urgency with this setup because we did have that ripper. We are holding back above this level. But there was two-way trade on the way down. Not much of a gap. There was a bunch of congestion leading up to this. And yeah, we just can't take for granted that things are going to rip up through here the same way if we had some kind of gap. We're back at resistance. So I think that you probably have a little bit more time. You have a little bit of an ability to pay attention to development up here than feel like, you have to join in on this right away. Or rather, the price is still something to prove, or still has something to prove. When I speak too fast, I'm like, I guess I'm dyslexic because I just say things backwards sometimes. And that's that. So we're back within what is local value. We established this of the last 3 days. So yesterday started off balanced day before, balanced day after. If you look at these distributions, it's, it's very clear that price is forming a, values being established between 16.85 and 16.65. Right now, the implications of that, or what I should say is that, any kind of acceptance outside of a break from balance, again, you're not usually going to want to fade the first leg. We had a leg down yesterday. This is the recovery, so it's been a one-sided market from the open. Market structure is not that attractive, right? You're not usually going to see a massive trend change off a move like this. You just have some ugly structure below, but that's local. I mean, we're building structure here. We do have a rejection there, but again, a good amount of this, I would assume, I don't want to assume, we'll just see, is probably from a short squeeze. So where is that ripper? Okay, so there we are. So these are the last couple days. There was that breakdown. So big wipe in OI. So longs wiped. So again, I talked about yesterday, funding was going positive and had been positive. And then market rips up. And then you get more. It looks like this is all just, if we just isolate these, most of it's a short squeeze. So it's, it's organic in the sense that short squeezes are parts of part of the market. But that's what it is. It was fueled by a short squeeze. So it was fueled by positioning being forcefully closed out. And yeah, I guess for this, it still doesn't change the fact that I'm not looking to get involved just because we did that. So let me bring it back. Yesterday I was saying, I don't really care to get involved here. I'd rather get involved at extremes. So get involved, clear break, right outside of this, at one of those extremes I mentioned yesterday. I didn't get involved in that either way. But now we're back within this range. Just because this transition occurred doesn't mean that I'm suddenly getting involved sooner, because I think that the priority still lies in overtaking that level above. And it's not like I feel like I'm going to miss out if I just wait for price to do a little bit more, because this could still very well be a resistance that still does its job, and this was just a short squeeze, and we end up with something that continues to melt down. And the point is, after a move like this, it's unlikely that this level is going to act as some kind of major support, right? If we continue to roll, I should say that, so you have excess here, right? So market was rejected there. One-sided move from today. If the market comes back down to test that level, do you want to test those buyers again? You already had a good enough, you had already had a significant response, and most of this was a short squeeze. So do I think that there are even natural buyers down there? I don't know. Point is, if we start accepting back into that composite, I think you just start looking at those lower levels again. Now, not going to write this off. So we are consolidating against resistance. If we're able to break, and I know it probably seems kind of trivial, if the market is able to break into this level, and I don't see that right away it's something that leads to an immediate rejection and swing failure, which is, kind of, this is something that you're going to have to just be observing it in the moment because it's probably going to happen fast. If after this kind of flag, we poke up and I see that sellers are getting absorbed right away and that the market is remaining bid, and it's not the opposite case. So if I was going to look at, so real quick, as I said, it's not just a gap. So that line of 16.9, 17 is, how do I move this? Oh, I'm thinking Sierra movements and I'm using EXO. There's still a good amount of congestion above us, but it really thins out up here. So above 1760, that is where things can start moving very quickly. All right, but I don't think I would need to necessarily wait for that to happen to start getting involved. I think it might pay to get involved a little bit sooner, but this is a naked volume point of control again. That's just around 17. So maybe 17 is, but that puts us much further up into that level. I guess it's not that big of a deal. I'm looking at this as a composite, but the truth is that this is the region which price moves pretty fast through. Either way, I think I would start really looking for, if you're going to remain bearish, at least in the short term, you want to see that this leads to an almost immediate rejection. And what that would probably look like, or a sign that I wouldn't want to see, I should say. Would be like, let's say we roll up there and we have something that looks kind of more along the lines of this, right? A bunch of aggressive buying. Imagine that open interest going up with this, but you see a bunch of buying towards the high, and then, worst case scenario is for bulls, you get a bunch of that buying towards the high. And this is, I'm using this candle as an example. And then you have some of these zero prints at the high. So spreads blow out, price never goes bid up there because that's what that's implying. The bid is not walking up with that. So if we're looking at this and then you're looking at this bid ask cumulatively on the side, what this means is that as price moved up, this bid, at one point it didn't step up with price. So passive buyers no longer became interested. Market makers no longer became interested in providing liquidity up there. And again, this was more one-sided. You look at like a volume profile, delta profile, you see how you have a good amount of that distribution into that wick. And that's ugly. That's kind of like your swing failure setup from an order flow standpoint. Like that's one of the characteristics of the footprint that you would see. Now, if we break above, let's say we just right now we start cleaning up above 16.8. There's no immediate sign of rejection, but instead price moves up above that level and you get something. Let me find a good example. And listen, it might sound like you're finding the perfect example just for the trade, but perfect examples don't happen in reality. Well, you should be really choosy either way in this environment. So, hey, maybe the market goes up there, but it doesn't show the immediate signs of offside buying, but it also doesn't have, the most selling that's absorbed to make you that confident. Either way, right? Let's imagine that 16.9 is here and that none of this happened. And the first minute, 2 minute, 3 minute, 5 minutes above that level, you see that the market is getting sold into, or price is getting sold into, that level is getting sold into. And instead, price is remaining bid. So meaning sellers hit the tape, right? Hit the bid, and price still continues to hold that level. And then if anything, a major sign of strength is that happens, price moves up, and then imagine you get more selling coming in. So more selling, and instead price is remaining bid. So for each time that you get that selling coming in, price is holding it. So imagine if this is a good example right here. A strong trend in progress leaves something like this consistently below us. So as the market comes up, we continue to absorb selling, and yet the market continues to trade back above that level. See you, Ty. Have a good one, brother. Just trying to look at CVDs. Spot selling, futures buying. Not usually the best look, right? If you look at just predictive funding, and then we look at just actual funding into this move, you know, funding increasing, and only more recently that beginning to change. But remember, funding doesn't have to necessarily mean short sellers are coming in and opening up shorts, right? Funding could very well change due to one side just closing out, right? And the market being less liquid. So let's say any of your longs who got involved on the way up, you know, if they started closing out size, it's entirely possible that they bring the derivative price under the index. And that might give you the, you know, that might give you the signal that, or that might appear as funding going negative because it's into an illiquid book. And then you're thinking shorts are opening up. But meanwhile, it's, you know, in that case, usually you'd look at open interest dropping, and then you'd see funding going negative, and you can make a case for longs closing out. Anyway. It's almost 9 o'clock. Oh, one other thing, because I said this yesterday, I think that Litecoin is cooked. I still do think it's cooked. I think that this probably throws back, though. So leaves us with something maybe like this, and then continues to move down. And that's probably the better area to get involved. Or excuse me, I should say that is absolutely the better area to get involved. One thing that I should have written yesterday, or should have clarified yesterday, is that this is one of those one-sided moves into a level, into a key level. So, I mean, the market would have to continue to pick up speed, right? Things would have to continually get worse across the board for this to actually just nuke the entire level. And if you see things just begin to pause and that continue to, you know, that development stops, well, then more than likely this level is going to offer a bounce, right? One-sided move into the level from a distance. It's very unlikely the market just continues down through the next major level without some kind of catalyst. So this level acting as support, I think you get some kind of lower high that develops, and then possibly want to look to sell that, some kind of underside, backside retest of this structure. But I think it's cooked. I think it's cooked because it's below all of its, it was below all VWAPs. You had a break in market structure at a key level. I can't imagine that this continues to move up from here unless it's for some mean reversion. And a lot of that is because I still think that Bitcoin probably comes down and tests lower again. Not impossible though, right? Because if you look at just immediately, this was a pretty ugly failure, right? That looked like, hey, this might be the one that continues to nuke down. Same kind of roll. And then what? Continued up. So that's why it's really important. Like, I have my opinion, but you also should have your invalidation. Invalidation for this is, hey, there's no reason why this should be back in this range if it was going to continue to fail. There's no reason why we should test these highs again. So if that's the case, let's say price is trading back above 75, well, then I'm probably going to actually get long. So this is the area where I want to pay attention. Same thing for BTC, though. I mean, talk about what I think is going to happen, but what happens if what I think is going to happen doesn't happen? How do I respond? Well, in this case, just if we're just going to, and I think this is a, you know, this is a time when you could just simplify it. Forget about your value areas. Forget about your, more granular levels derived from order flow. If we're back above that daily, if we're back above 17.6, 17.5, after all of that, so big range, failure, back within, mid-range, sort of, key levels derived through value. We're interacting with those levels. But if we're done with all of that and we're trading back above 17.5, 17.6, I mean, are you really betting on this level to give you a firm rejection again? No, it's much more likely that now this looks like the best level to place a stop or an invalidation. Anyone who's short on the way down has not been really tested, but you could be absolutely certain that this thing probably rips up if we're back above that level. Until then, I mean, the more likely case is, in my opinion, right? I don't know if you could say more likely because market's going to have a significant amount of randomness to it, and it's not necessarily self-fulfilling from a technical standpoint. But breakdown here, same as reacceptance back here. You're just looking over time to target the other side. You expect things to slow down at mid-range, right? This is an area that's usually ripe with liquidity, a lot of two-way trade, going to be pretty sticky. But over time, retest the low of that range. Now, again, trading back into that prior composite, retesting these lows, same as up here. I mean, if you retest this area again, you're going to step in the way. If you retest this area again, are you going to get long again? No, you're just going to immediately start looking lower. I think that does it, though, guys. I'm going to wrap it up. Yes. Yeah. So I don't know. I haven't really looked into the grayscale tender offer, honestly. I think it means that they buy GBTC back at like a premium, right? And then sell that BTC either way and capture that difference. I don't know, though. Or sell big. I honestly, I haven't looked at it the last day and a half. I mean, I should actually, now that it reminds me, I have to get more of an idea as to how that works, because, it's very important, honestly, to have an understanding of all the things that are going to affect your market. Like, trading is not as simple as just identifying levels on a chart, right? You should have an understanding of what things that are currently driving the narrative, or what things are currently driving the narrative, how they affect price, especially when there's some materialness to it. In this case, there's potentially supply that's going to hit the market. And this is the same along the lines of how you should understand, how things trade around the open and close, what players are trading the market, what the average daily range is, our average 30-minute range. How do equities trade at the end of the month, the beginning of the month, around earnings, right? Around the end of the year, how they trade when liquidity changes. So in crypto, we have a little bit more to deal with right now because we have, some potential systematic risks that's on the table. And I guess one of the more useful things to do if you're in position would be to understand how grayscale might affect the market potentially in a negative way, and maybe to try to quantify that to get an idea of potentially the sell pressure to hit the market. And I think you could sort of use your imagination as to why I'm dumb for not paying attention to that after explaining it. All right, guys, it's 9 o'clock. As I said, going to keep these an hour long. I don't want to waste anyone's time. I can't imagine. I've done it before, but I think it's better to do these things shorter, just like it's better to keep meetings short. So that's that. If you trade on Phemex, if you're interested in signing up to Phemex, you tick all those boxes, right? And you want to trade perps, you want to trade spot, no KYC. Obviously still fall under their jurisdictional rules. There is I don't know what the current bonus is. If it's 4K, I think the next bonus would be like 8K, right? But the link is below, and all that should be attached to the link either way. Until next time, hope you guys have a fantastic